Jackie, you may begin.
Good morning, everyone. On behalf of the U.S. Commercial Service in Connecticut and also the Connecticut, New Jersey, and New York District Export Councils, we welcome you to our Trade Talk Tuesday for the month of November. Today's topic is credit insurance. And my name is Jackie Torsellini. I'm an international trade specialist with the U.S. Commercial Service in Middletown, Connecticut. I'm also joined today by my colleague, Anthony Sargis, who's helping out with the technical aspects of today's event. Before we get to our presentation, I'd like to give you a couple of items of note. Today's session is being recorded. Everyone will be on listen-only mode, and we will open up microphones for question and answers at the end of the presentation. If you have any questions during the presentation, please feel free to pop them into the Q&A section. You can also pop any questions in there if it's pertinent. I will try and pose them during the presentation. Both of our presenters have said they don't have an issue with being able to do that. I'd also like to mention that at the end of the program, we will be providing information about the additional events that we're holding this month. And this month, we're focusing on all global trade finance topics. So there'll be some great information coming up in addition to what is being offered today. And also after today's session, either tomorrow or the next day, Tony will be providing the recording of the session as well as additional information that will help you along. So what I'd like to start off today is by introducing our presenters. We have Richard Foy, who is the Regional Director in the Northeast for the Export-Import Bank, or otherwise known as EXIM. Prior to joining EXIM, Richard was most recently working with the International Finance Group, where he was the Vice President of Commercial Lending. In this role, he provided access to loans through various funding sources to meet the needs of his clients. And prior to this, Richard worked in marketing and was also an underwriter for ocean marine cargo insurance and has extensive logistics background with over 20 years in the field holding positions in operations, risk management, quality insurance, and environmental affairs. So thank you, Richard, for joining us today. And then we also have, I'm very pleased to introduce Jenny Lazan Norris, who is the Eastern Regional Director for Meridian Finance Group, which is a company that provides credit insurance and trade finance tools that companies can use to expand international sales. Jenny's a graduate of UConn and has an MBA from RPI. She has 25 years of experience specializing in the field of international trade finance. Prior to working with Meridian Finance Group, Jenny worked at UPS Capital Business Credit, where she managed business development for the bank's cross-border equipment loan programs in Mexico, Brazil, Colombia, and Turkey. And before US Capital, Jenny worked with Gerber Technology in their international contracts department. She's traveled extensively and speaks Polish and Spanish, which I did not know. That's very exciting to hear. So thank you both for being here and providing your expertise to the clients that are on the call. So without any further ado, please begin. And thank you for being here.
Thank you for having me. We can move on to the next slide, and I'll start with just a brief introduction of EXIM Bank. EXIM Bank is an independent agency of the U.S. government established in 1934 as part of the New Deal. The focus then and now is to create jobs through export. So we support exports because those that export are typically faster growing companies and they hire at a faster rate and they're more durable. So that's why we focus on exports. We're headquartered in Washington, D.C., and we operate out of 12 regional offices, and we're separated into 3 different regions, East, Central, and West. Next slide. I'm going to go over some of the export challenges that we see and that we look to address in the market, and then go over a couple of at a high level programs that EXIM Bank offers. And then Jenny will go into a deeper dive into credit insurance. So some of the challenges that we see is foreign buyers, they want credit terms, and there's always a concern whether you as the exporter will be paid on those invoices that you have extended terms. So we seek to address that by insuring those receivables. And what that means is if your foreign buyer fails to pay you, then we will pay you and we'll work that invoice out with the foreign buyer typically. And this does a few things for you. One, it puts you in a strong sales position, and it can assist you in financing as well. Next slide. A couple of other points is you get a nice order from a foreign buyer, but you need some working capital to fulfill that order. You need to buy or produce the goods that you will export. You need working capital for that. We do have a program that provides a guarantee to the lender so that if you default on that loan, we will pay the lender. And that kind of provides them some comfort in making it what could be a difficult loan for them traditionally. We also offer the same type of guarantee for a lender that's going to finance your foreign buyer. This would be for capital goods, machinery, and things of that nature that not a consumable product, obviously. So machinery that's going to have a lifespan of 10 years or so, we can offer term finance. Next slide. I want to point out that we are very focused on small business. It's always out there that we only focus on large business, Bank of Boeing, and all of that. In fact, about 90% of our total authorizations, so each transaction, are to really support small business. EXIM actually supported in 2020, we supported over 2 billion in small business transactions. We say that no company or deal is too small, and that's true. On the insurance side, for sure, there's really no minimum. On the lending side, banks choose which guarantee they is most appropriate for them. On smaller deals, they'll typically go with an SBA product versus an XM, but that's completely up to the bank that's making a loan. Another important issue to note is that we operate at no cost to the taxpayer. As a matter of fact, this slide is a little dated. As of 2020, we've returned over $9 billion to the Treasury over the last 20 years. So we call it a negative subsidy. That's the government way of saying that we're a profitable government enterprise, that we don't cost the taxpayers money. Next slide. There are some eligibility requirements for our programs. We look for businesses to be in business for 3 years. We also like them to have experience in exporting. That does not necessarily have to be experience in that company. You can have acquired experience. You can hire somebody that has experience exporting, and that would meet our needs. You do have to have financial statements or tax returns for our loan programs, but that's common financial underwriting. And for all of our programs, you need a DUNS number. We do have a content requirement. 50% or greater U.S. content is required for our programs. For medium-term and long-term programs, we can support up to 85% of the transaction or the U.S. Content. So if you have something that's 100% US made, we could support 85%. If it is 70% US made, we can support up to 70%. Next slide. And I'm going to turn it over to Jenny because she's going to take a deep dive into, well, that's a 15-minute deep dive into credit insurance. Thanks, Jenny.
Thanks, Richard. You can hear me okay? Okay, great. Yeah, so as Richard just explained, he talked about the EXIM Bank and what the program is. We are a credit insurance broker. We help you actually navigate through the system and help you to get those exports done and secure the credit insurance. So let's talk a little bit more granular now. So you've made the sale. Now what? You probably have some challenges, such as your customer overseas wants to not pay you fully in cash. They want you to offer them some terms. It's really difficult for them. Number one, they probably have to go to a bank themselves to get a loan. So they'll always turn around and ask you for terms, because getting supplier debt is a lot easier for them than getting bank debt. The trouble is, what do you know about them? These days as well, not a lot of people are visiting their clients and vice versa. So you may not know who these folks are. You could get a trade reference, you could get a credit report, but that isn't really understanding what it is that your customer is doing out there. So I know in the back of folks' mind is they don't necessarily want to make that sale on open account. If you can get the cash in advance, great. But if you can't, and you may perhaps lose the sale, then you should at least know and understand what credit insurance is, so that can help you down the road. Next slide. Okay. I don't have to go over too many of these risks, but these are the risks out there. Again, you might not know if your client or your prospect overseas is having any issues. We've had cases where companies will have a fire, and now they've had a fire locally and they can't pay you. So you never know what's going on. Especially right now with the supply chain issues, we're seeing worker shortages overseas as well as energy rationing and inflation. So all of these things can be risky. Don't want to scare you. We certainly want to support export sales. So there are some ways of doing it with some security. Next slide, please. So what I want to talk about is credit insurance, export credit insurance, and EXIM is one provider. There you've got a lot of advantages, but there's also the entire private side as well. But let's talk about EXIM Bank, especially for companies that have just started to do some exporting, maybe aren't doing enough to go jump into the private sector. This is just one of the 4 policies that EXIM has. And this is a great one to start if you don't have a lot of experience with offering credit to companies overseas. This is their express policy. It allows you to pick up to 10 buyers. It's a standardized rate. So whether you're selling to Canada or to someplace maybe in West Africa that's a more risky market, you're paying the same amount. There's no deductible, and one of the key features of EXIM Bank is that it is a pay-as-you-go policy. What that means is whatever you're shipping, that's what you're paying for. So if you get one sale for $50,000, you pay for the insurance there. Maybe you don't have another sale for a couple months, so you're not paying for anything. Private sector is a little bit different. You have to pay in advance typically for a 1-year policy. So this is a really nice way of getting your feet wet in understanding credit insurance. And look, it's not something that you necessarily have to jump all the way into. You may have a customer that has been paying you cash in advance, and now you want to start opening things up. Maybe you still require 50% down and do 50% open account. Like I said, you don't have to open the floodgates, but that might be a nice way of starting it out. And you should be charging for this, because quite frankly, if you're not giving the supplier credit, they've probably got to go to a bank and borrow, and that gets expensive. So you may want to offer your clients, here's my price cash in advance, here's 50% down, 50% in 60 days, and here's 100% open account. Now, we'll talk about that 100% open account, because I think that scares some folks too when they're talking about their own cash flow. So go ahead, please. Okay. Claims. Obviously, everyone asks about claims, and I don't want to go into too many details here, but whenever you've got credit insurance, the actual policy is the answer key. So whenever someone asks me about something about their policy, I'll pull up the policy itself and find the answer in there. The policy is actually, EXIM's is great. I think it's 11 or 13 pages. It's not really hard to go through, but there's a few key things that folks need to know. There's a claim filing window. They have to file claims in a certain amount of time. There's certain documents that you need. You need a purchase order, you need an invoice, and you need a shipping document. Could go into the weeds there a little bit more about shipping documents and who shipped it where from, you know, did you ship from Miami? Did your customer come pick it up? All of those things can be addressed through the policy. They're all there, and it is completely something that any exporter can follow and do. Next slide, please. All right, key takeaways, and I've got one thing in here that I want to talk about here. The reason why companies use credit insurance is so that they can, there's three main reasons, but number one is to offer competitive terms. Okay, they want to be able to make that sale and get it versus having an Italian manufacturer offering, you know, 60-day terms when you're offering payment in advance. Protect your accounts receivable. This is sleep insurance. Okay, knowing that on your balance sheet, that second line item right after cash is usually accounts receivable, and that could be a big number sometimes, or hopefully it's going to grow. Knowing that you've got insurance on that second line item. Increase your borrowing base. This is what I wanted to highlight. If you are going out and offering open account terms, complete open account terms, there's a cash flow issue there. Richard talked about this earlier. You can use your credit insurance policy with your bank. If you sign that policy with the bank, a bank may be willing to provide you financing against those insured receivables. Okay, it's really important, something that a lot of folks don't necessarily think about. I said that there's three main reasons why companies use credit insurance. It's those first three. I tacked on the fourth one because somebody once in the presentation said that this was so important for them, so I wanted to add this too. It's supporting your AR function. What that means is, if you've got somebody in your finance department, or maybe you're a really small company and you're the one making that decision, how do you actually make those decisions? Having credit insurance is going to help you. It's going to, you know, if you've got an opportunity, you're nervous about it, if the U.S. government says, go ahead, we got you, you can go ahead and make that sale. So those are the key takeaways. I think my time's up, so thank you very much.
Great,
Please feel
thank
free
you.
to take a picture of our contact information. These are probably the most important slides because we went through these fairly quickly. If you do have any questions, feel free to call either myself or Jenny. We always love speaking with exporters. We have pretty wide networks, so we can plug you into other resources if we're not the answer to the problem that you actually bring us.
Great, thank you. I actually have a question. Richard, you had mentioned earlier on that the percentage a company is eligible for to, I believe it was borrow from EXIM, is directly proportional to the U.S. input of the product. Can you just explain that a little bit more? I want to make sure I understood what you were saying.
Yeah, so and that was on our medium term and long term finance. So this is finance for the foreign buyer, and we look for 15% equity in there. So they have to bring that either in cash or other financing. So we top out at 85% you know, coverage or financing for those deals. Now, that is if it's 100% US content. If you have a lower US content, we can only support up to that US content level.
Great, thank you. I appreciate that. And then Jenny, I was wondering if you could give a clarification on the credit insurance. When a business is purchasing that, will they be purchasing that just for their international book of business, or will that cross over international and domestic sales?
Yeah, that's a great question. That comes up a lot. So obviously, EXIM Bank can only support the the exports that have the U.S. content of at least 51% and that are shipping from the United States. Now, sometimes we have companies that'll say, wow, this is a great product, didn't know about it, can I use it domestically as well? So as a broker, we can take a look at the private sector. I'm not saying anything that Rich doesn't know, but companies, EXIM wants companies to graduate out of their program because that means they're doing more exports. So if it comes down to combining domestic and international, and it makes more sense for the company to do it through the private sector, then we'll do it there. We do have some companies that have two policies, one domestic because they for whatever reason they like the private sector, but maybe another one for EXIM Bank. So there's really a lot of different ways that we can kind of structure something, but absolutely it's available for both, so long as the invoice is coming out of the United States.
Great, fantastic. Thank you for that clarification. There's so many great different financing tools. So it's wonderful to hear firsthand how they operate and to know that both of you are available to support these businesses. And Tony just put up the slide that is going over what our next programming will be for the rest of this month. I don't see any other questions in the Q&A, but I will put out one last shout out. So if anybody has any questions, please feel free to either put them into the question and answer, or you may unmute yourself at this time and ask the question directly. So we'll just let that for another minute, and